Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply stocks. And in this video today, I'm going to discuss about a very interesting company. This is a technical pick, and this is a company in the auto ancillary segment, which I feel is going to do pretty well, can give you 15 to 20% upside over the next 3 months or so. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I am not an NSE and BSE certified member. I am not a portfolio advisor, so kindly take that on note. And whatever I discuss here is for educational purposes and entertainment purposes. And probably you can take a call on it on every stock whenever you buy. It is under your own discretion, and kindly do consult your financial advisor before taking any financial decision with respect to the stocks or companies that I discuss. So before I talk about Bosch, a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also with the $100 upfront, you get 1 year access by paying for 10 months. If you cannot pay on Patreon, you can join the WhatsApp membership on a yearly basis for about $100 plus GST, and all you can join on YouTube by clicking on the join button. You can do that as well, and you get all the benefits of that. I'll be putting up, you can say, the portfolio for YouTube members today, which I've constructed, and you will get also the watch list, etc., by today afternoon. For YouTube members, for Patreon, I did upload it last night, late night, and you probably would have got it. So now let me take you to the screener website, and to the money control website basically, and we'll discuss about Bosch, and how on a technical chart the stock is looking, whether the stock is looking primed for a move or not. So let me take you there. uh, so this is Bosch. Currently, the market is in a tailspin. So just to tell you about the market, let me open up the market and I'll talk about the Bosch as well, because I'm not a lot online these days, because online live these days, because of my family commitments and a lot of stuff going on at home. But just to look at the Nifty 50, and I'll just make you understand through this basic chart of Nifty 50 that we see here, the 1 year chart that we see here. So we are at 16,900 and we are going down further. 16,850 is a critical level. Once that goes, we are looking at 16,700, and once 16,700 goes, then the straight dive towards 16,000. So my worst case scenario here is that we could go to 16,000 levels or so and then reverse from there. But situation globally and especially in US is not quite, you can say, resolving anytime soon. So we could be in this band of 16,000 and 18,000, in this broad band of 2,000 points. Neither will go up here towards 18,500, 18,800, nor we will go down, I guess, below these levels of around 16,000, 15,800. Maximum I could see is a downside towards 15,800, which was there in June, and we did fall below it, but I think we should be fine around here. The reason for that is, from June 22 till probably April May 23, earnings have expanded. So at 15,800 the market will look extremely attractive. As I have mentioned many times, that in FY24 we expect that the earnings will be around 940 rupees. If we take 17 times, then we are looking at 16,000 as a number. I think the market should be around 17 times by that time, when the market bottoms out, or 16 and a half time or so. So around these levels of 16,000, 15,800, there is strong support. Even at this point of time, there are stocks that are coming at very attractive valuations and are doing well. So what one needs to do here is to hold on. If I look at a 6 months chart, that's a complete downtrend here, and that is why people are talking about not to buy anything if you are in cash, unless you know about some companies, or technically you know that some of the stocks may perform extremely well. Otherwise, being a retail investors, nobody should get into the market and buy into anything until and unless 17,400 is taken out. If you see here, uh, if I draw 1 month chart out of here, then we'll see that around these levels of 17,400 we saw this huge decline take place. So around these levels of 17,400 450 is where the breakout is, or your Lakshman Rekha is. So basically 17,450, above that take a long call. Otherwise this market is headed to 16,500 and even 16,000 over the course of next 2 months or so. We may not go there. We may just gyrate here and bottom out. But you need to look at one more aspect. Uh, uh, Apart from what the charts say on the Nifty, is the India VIX. And basically, if you look at India VIX, then we are in a very difficult situation, because in my opinion, India VIX at the moment, which is trading at around only 17 or so, is not trading very expensive. 16.4, it's up 10% today. I mean, this has to go to levels closer to these levels. I mean, closer to 22, 23 at least, for me to say that, okay, market is bottoming out. Mid 20s is where I'm looking at. 52-week high is 28. If you look at here, and this was February of 23. The VIX went up to 20. And if I draw, you can say, a 1 year chart of India VIX and have it as a line chart, then you'll understand that the VIX can go up to 26, 28, which it did during May, June. And I'm not talking of, you can say, even the Ukraine crisis, etc. I'm talking of June. It went to around 22 or so and then bottomed out. And from June onwards, we have seen a decent rally in pockets of the market, extremely huge rallies in defense stocks and you can say PSC stocks, etc. So 20 to 22 is where I would say that the market should bottom out. We are still at 16 and a half. So that's why the market is set to go further down. We could see levels of 16,000, and then the VIX could go to 20 and all. So that's another aspect that one needs to look at. And the third part, which I look at very closely, if I take you to Google, and then you can search about this, is the greed and fear index. And don't look at the CBOE or CBOD, greed and fear index. Look at the Indian market mood on ticker tape, and it's available free. And if you look at here, that shows around 24. That has moved up a bit because the market, some of the pockets in the market has moved up from those 16,850 to 17,200. The rally happened because in 1 week back it was around 11 or 12. So greed and fear index is in our domain, means we can buy if the greed and fear index is below 30. Then these are good levels to buy. But it has been around 10 to 30 for at least a couple of weeks. So this is where I look at where the market is. We look at the put call ratio, etc., and then we make a judgment. So in terms of the market, I believe that there is further downside, at least 4-5% more downside. Basically, there has to be a gap down and massive sell off in on one day of the market, and then the VIX to go up to 22, 23, and that's where the market will bottom out. It could happen today, it could happen 1 week down the line, but I feel that over the next 10 days, we will have a situation where the market will bottom out finally, and we'll see a sustained decent rally over 3-4 months in which people can make money. So we have to survive this period, make money, take profits off by June, July, and then again wait for a decline and put in money probably in the later half of this year for 2024, which could be a very decent year, because 22 has been very awkward, and 23 has been bad. It is expected to be not that great, so it might be bad, and then I think we'll have two very good years in the market. So we have to survive these periods. Now let's look at Bosch. 18,000 levels, very strong support. So I'm just looking at the technical thing, because the company has done well over the last 2 quarters. Technically speaking, I have drawn two horizontal lines in here. Basically, these were the pivot levels from where the stock really fell. And if you look at very closely, uh, and if I draw, so this is basically a 3 months or a 6 months chart. So this is the 6 months chart of Bosch, and if you look at it closely, then I would say around 18,400, 500 is the resistance which we are seeing, and around 17,800 is your support. So uh, the stock is near that. 17,700, 750 is your support. So basically, in terms of Bosch, it has done exceedingly well over the last 6 months to have come up to these levels. I think auto ancillary as a pack should do well. So in my opinion, Bosch for me is a buy with a stop loss of uh, this, which is the 50 DMA, 17,600. So you can keep a stop loss at 17,500. So that's a 500 rupees stop loss. And I'm looking at 21,000 plus on the stock in the coming few months. I think 21,500 is very much possible. So very good risk reward, just a 500 rupee risk for 3,500 rupee upside. And kindly do keep strict stop losses, do consult your financial advisor before taking a call. But if you look at a 5 year chart of Bosch, then you will understand that to go above these levels, which were around 16,500 or so, it has taken the stock a lot of time, and now it is trading well above it. So one has to understand that next leg of rally could take the stock to as high as these levels, which are 21,000 levels. So I think we are headed much higher. We are headed towards these levels of 21,000. But yes, definitely, in my opinion, there is a decent upside once the market recovers, once the market makes a bottom in the auto ancillary space, and Bosch is one of the highest pedigree stock. So my opinion is 21,000 is coming, 3,000 rupee upside, 500-600 rupee downside is what I'm looking at in Bosch. So it is a buy with a stop loss of 17,500 for a target of 21,000, and then 21,800 over the next 3 to 6 months. That's the call on Bosch. So basically, in my opinion, the market will remain jittery. The market will remain in a range, and it will be difficult for you to make money if you buy and hold for a sustained period of time. But if you are a positional trader, I think you will end up making decent amount of money. So this was the call on Bosch. There are other auto ancillary stocks that are doing well. I can't mention them right here. I'm invested in some of them. I'm not invested in Bosch, so that's a disclaimer. Neither I'm trading in it, but it looks pretty good at these levels. There are three, four that are looking pretty attractive. Auto ancillary as a space is doing well for the last 6 8 months, and it is extremely important to get into spaces, sectors which are performing, because the sectors which are not performing are getting hammered. We are looking at IT today, the way it is getting hammered and all. So it is very well, you can say it is very easy to say that we can invest into companies which are pedigree companies but are not doing well at the moment because of global pressures. But we don't know when that pressures or those pressures will end, and when the recovery will take place. If the recovery, by the time that takes place, you're down 25-30%, then it's extremely difficult to make money from those levels. So that's the call on the market. 16,000 might be coming in the next week or so, but hopefully from April onwards we'll see a sustained 3 4 month rally. Thanks a lot for watching.